Hello everyone, welcome to our non-farm payrolls report here at Markets.com. I'm Neil Wilson. We're just going to cover a couple of things that are happening in the markets before they open. I've got the charts open. We're looking at the dollar index. It's obviously been trading at a 20-year high coming into this report. The Federal Reserve is hiking quite aggressively, and the dollar's been a safe haven. So looking at dollar index, it's just off its highs at the moment, just trades at 106.89 now at the moment. And the euro is down at 101.57, so a little bit off its lows of the day. The euro had closed in on parity earlier this morning. Looking at jobs numbers, the expected number is somewhere in the region of 270,000, maybe 250, 270. My own indicator suggests it probably a bit lower, but it's always a bit of a guess. The ISM Services PMI labour statistic was quite weak, and that suggests that maybe we are in for a slightly weaker number. And of course, we're looking in terms of the market narrative that's driving the markets over the last few months, particularly the last few weeks, is the recession narrative, and really you need the jobs market to roll over, and we haven't seen that yet. Jobs growth has been pretty strong. 250, 270 would still be down on last month, so we're seeing a trend weaker. We had the initial jobless claims were at a 6-month high yesterday, so again pointing to weakness. Wages seen at plus 5.2%. Now, a hot wage number is a worry for the Fed. It's a worry for the market because it indicates that you get that wage price spiral starting to bed in, and that's bad for inflation, of course. 5.2% is expected annual increase, and unemployment seen at 3.6%, so still very low. What happens on a hot number or a weak number? Well, in terms of the dollar, stronger than expected job and wage growth would probably boost the dollar because you think rate high expectations would increase. Probably bad for stocks. We've seen the S&P rally pretty nicely this week, and it's up for 4 days on the bounce, first time this year, and it is around 3,900 as of yesterday's close, and it's tracking around that level now ahead of the open, so 380.97 at the moment, so it's not doing too bad. The Dow is called about 40 points higher. Weak employment expansion, high wages, probably good for the dollar too. Rate hike expectations again. Bad figures for both would probably trigger some safe haven flows into the dollar. So again, the dollar is really winning in most circumstances, and really we think that probably the only way the dollar falls on this is if wages are weak and labour market strength is strong, because that sort of allows the Fed to not hike so much. Of course, implications for gold markets as well. So just 2 minutes to go before the numbers cross. Drop me a line at MarketsNeil on Twitter. I'll try and reply. If I can multitask enough to reply, I will. Just going to get the news open. There we go. So otherwise, today's been marked by the death of Shinzo Abe, the Japanese former prime minister, assassinated in Japan whilst on a campaign trail. Shocking developments there. But I think it's indicative of the breakdown in the political consensus that we're seeing. I was talking about this in the morning note today. I tweeted about it a couple of days ago. I actually mentioned the phrase political assassinations becoming more likely. Unfortunately, that came true rather too early. Otherwise, what else is happening in the markets? Well, oil's at 102. The WTI front month's up to 102, so well off the lows of the week. Risk appetite's been moving around quite a lot, and I think, as I pointed out in my morning notes, that the oil market seems to be moving less on the fundamentals and probably a technical move, and probably some sort of book blowing up, someone liquidating, some big trader having to liquidate their positioning, and that's really been what's driving that market. It's still incredibly tight, as evidenced by the steepness in the backwardation of the futures market, which indicates extreme physical tightness in the market, and I don't think that that's going away anytime soon. So we're just nearly coming up to numbers, crossing again 250, 270 in that region is where we're looking. There we go. Get the numbers up. The euro well off its lows of the day, 101.50 there. We can just see what happens. Bitcoin's at 21.5, gold at 1740. and we'll see what the knee-jerk is. So knee-jerk is euro lower. That's because US Non-Farm Payrolls actual 372,000 versus 390,000 previous estimated at 268 was the final estimate. So stronger than expected jobs numbers. That means recession narrative takes a bit of a back step. Inflation narrative continues to drive markets, and that's bad for, probably overall bad for the market. We saw that recession narrative actually be quite good for growth stocks this week. ARK Innovation ETFs up something like 20% this week, because if you think there's a recession, you need to pull out cyclical stocks and go into growth stocks. Where are we at? Unemployment rate 3.6, yeah, as expected. No change there. Looking at market reaction, stocks are down, gold's down, dollar up. So as was the most likely reaction, really, based on the balance of probabilities, dollar up, stocks down, gold down, Bitcoin down as well. Again, Bitcoin's trading like a risk asset, it's deeply correlated, and it's struggling at the moment. So euro is off down to 101.2, and that is still above the lows of the day. Struck out, where is it? Struck out 1.00719 earlier this morning. Average hourly earnings up 0.3% in June. So not a particularly hot number there. Treasury yields on the move. So the dollar's up. Treasury yields up. 10-year yields up to 3.05%. That's up 5 basis points on the move. So again, it's the market is saying that this is a report that gives the Fed more scope to raise interest rates, and no doubt about that, really. Average hourly earnings up 0.3% as expected in June, and that is really the major numbers. Let's see if we can drill down into anything here. So wages up 5.1% annually. Again, so slightly weak wage numbers mean that the wage price spiral is maybe not such a concern for the Fed as it might be. There have been signs that inflation is rolling over a touch, and we've seen commodities come off quite sharply in the last month. So the Fed will be pleased about that. But overall, no signs that the jobs market is cooling too much, and wages still up quite strong, up over 5%. Inflation remains, of course, above what's around 8.6%, and we get the US CPI numbers next week, so keep your eyes on those as well. So anyway, the long and the short of it is good knee-jerk reaction anyway. It's good for the dollar, bad for stocks, bad for gold. And gold's not really moved that much, but it's down at 1735. The S&P now called to open at 38.77, so down about 20 points on that move. So definitely a report that's negative for risk. So that's it for the time being. I think we can pretty much leave it there. We could just get the revisions there. I'm just going to look at the revisions. April revised down by 68,000 from 436,000 to 368,000. May revised down by 6,000. So jobs growth has not been quite as warm as the previous 2 months reports have indicated. And trying to find some of the other numbers in here. Leisure and hospitality adding 67,000 jobs. Employment and healthcare rose 57. Transportation and warehousing added 36,000. Professional business services up 74,000. Total non-farm employment is still down 524,000, or 3.3% from its pre-pandemic level in February 2020. So there's still 500,000 jobs missing in the labour market at the moment. Just seeing a pop back up in the euro, it's just claiming some ground. So often on the non-farms you'll see that a knee-jerk and then reverse. Doesn't mean that the reverse is where we're headed, but bit of a pullback there. So the euro is just coming back a touch, and the dollar index is back down. So dollar index spiking up to 107.26.27, back down to 107 on the nose right now. So we're looking ahead to the US market open later. It's coming up shortly in just under 1 hour. Cash equity markets opening up in America Soon we'll have the Walk on Wall Street coming up for you. Stocks making the moves pre-market. Levi Strauss up about 4% pre-market, better than expected sales and profit last quarter. GameStop down 5% pre-market trading. It's cutting staff, so it's the great meme stock, of course. Twitter down 4%. Reports from the Washington Post suggest that Elon Musk is close to pulling out the deal. Of course, he can't really pull out the deal because he signed a binding contract. Upstart Holdings, that's a AI tech-based lending company, up 16% after it said it would not meet already reduced financial targets. Sorry, down 16%. Occidental Petroleum up again. Berkshire Hathaway, Warren Buffett, Berkshire Hathaway adding yet more Oxy stock to its portfolio. So anyway, that's the Non-Farm Payrolls report for you. Thanks for joining us, and we'll see you again next month. And do check out our Walk on Wall Street coming up soon, and the week ahead will be due out on Sunday. Thanks very much for watching.